Good morning. It's Thursday, September 27th, about 4 a.m. Central Time. I've got to jump onto a flight, so I'm getting this out real early. And I want to start off by saying that there's an old saying in futures trading, and it's really the Warren Buffett mentality. When they're crying, you should be buying, and when they're yelling, you should be selling. And it really comes on the heels of the precious metals after yesterday's big sell-off. It was a bloodbath out there. We saw gold dip below $1,900, silver below $23, platinum below $900. These are levels that we wouldn't expect to see anytime here soon, but it's really been this broken record with China's economy continuing to weaken, the US dollar making new highs, rising energy prices elevates inflation expectations, and then the higher for longer theme just continues out there. Now, looking at this overnight session, we've got gold a little bit firmer here. It's been floating up about $1, 18.92, silver up 5 cents, 22.75, copper up 4 at 3.67. That's interesting. That's a percent move there. Platinum up 1 at 8.97. So, if you look at from a trader standpoint, what exactly is happening here, and it's just taking a step back here. Sometimes you got to take a step back. You look at what happened from January to June, just from the stock trader, the average stock trader, which most people are. Precious metals are a bit more narrow, more unique of an investment, but from the NASDAQ going up 36% for the first half of the year. So you're looking at your account, it's up 36%, and you look at the S&P, that's up 16%. You know that a recession is coming. You naturally pair out of those assets, which they did in a panic here the last few days. And what did they do? They piled into treasuries. So they want to take in and lock in that 4 and 5% yield here and have comfort throughout the year. They're not going into the gold market yet because of the fact that they can lock in this yield right now. Now, when the recession starts to occur and the slowdown really impacts the U.S. economy, Treasury yields will come down because it'll be pricing in that cut, and then they'll have to rotate into the next cycle, which is a rate cut cycle. That's where your gold takes off. And then you'll get silver to follow. And really, it's China should be doing this first because their economy is extremely weak. They're in the doghouse right now. That's where copper takes off, silver takes off, and then they price in us, and then gold takes off from there. So if you're buying on this material weakness in the precious metals, which I think everyone's got to own some down here, you're just ahead on the next cycle. You're getting in ahead. You're owning an asset class that should perform well in the next cycle and turn back up. So getting into the current trend and the critical levels that I'm watching here this morning. So the current trend on gold, bearish. On silver, it's bearish as well. The trend reversal points are coming down. If you look at gold, it's going to be 1962. The 200-day moving average above that, 1982. I'm going to give you 3 levels of support and resistance. On the resistance, it's 1898, 1907, and 1902. So 1898, 1902, 1907. They're all compressing just in that above 1900. So expect some sellers to come in if they get back above that 1900. Your support is 1880, 1867, and 1854. If you look at silver, that 200-day moving average is 2414 and the trend reversal point is 2414. So that number is going to be very, very important that silver crosses back above. The resistance points, similar to gold, are compressing around a whole number. You got 2291, 2305, and 2318. So it's going to have a tough time getting much above that 23 level. This is today. If you look at the support, 2245, 2213, and 2180. Those numbers on the supports are wider on gold and also on silver and dipping down on the low end because of the volatility increasing as the price goes down. That's the way the algorithm does it. Okay, if you look at the outside markets, they're mixed right now, a little bit softer. We were firmer in the early part of the overnight session, but then we're kind of backing off here. I think that there's just a lot of people out there panicking to hit the sell button right now. Is it that they're pricing in this government shutdown? Who knows what their individual motives are, but it could just be that, hey, we're seeing, one of the worst days in the Dow since March. We might want to rethink things, so they're liquidating. The US dollar is down about 11 ticks right now, 106.27, hovering at those elevated levels. Crude oil is unchanged, 91.32. And then also 10-year treasury yields 4.63. So really moving up on the treasury yields here. If you got any questions, I'm going to be out of the pocket. If you ring my number though, it'll go to the support staff. Those other guys will be able to help you out. And then if you remember that futures and option trading, it does involve risk of loss. It may not be suitable to all investors. Good luck and good trading.